Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Netease Cloud Music Inc. Annual Report. Netease Cloud Music Inc. offers a diverse range of businesses and services to its users. At the core of its operations is the online music platform, Netease Cloud Music, which provides users with access to a vast library of songs and albums. In addition to this, the company also offers various social entertainment products, including Look Live Streaming, Shengbo, and Yinjai. The company's services extend beyond music streaming, as it also provides membership subscription, content sublicensing, and online advertising services on its platforms. Furthermore, Netease Cloud Music Inc. sells digital music albums and songs, as well as virtual items in live streaming platforms. This comprehensive suite of offerings enables the company to cater to a wide range of user needs and preferences. Overall, Netease Cloud Music Inc.'s business model is centered around providing users with an engaging and interactive online experience that combines music, social entertainment, and e-commerce elements. By offering a diverse range of services and products, the company has established itself as a leading player in China's online music market. The stock price of Netease Cloud Music has experienced a significant increase over the past year, with a reported one-year return of 32.4%. Several key news events contributed to this positive trend. One major factor was the strategic licensing agreement with Universal Music Group in January 2026. This deal enhanced Netease Cloud Music's content library and strengthened its position in the competitive Chinese music streaming market. The company's strong fiscal year 2025 financial results, announced in February 2026, also instilled investor confidence. Key highlights included a substantial increase in adjusted net profit and operating profit. Additionally, reports in late 2025 indicated improving profitability and operational efficiency. Netease Cloud Music's gross margin improved to 35.7%, primarily due to increased revenue from online music services and continued improvements in operating efficiency. The integration of Netease Cloud Music Charts into Chartmetric, a global music data analytics platform, also provided deeper insight into China's streaming landscape for the global industry. These news events collectively contributed to the increase in Netease Cloud Music's stock price over the past year. Netease Cloud Music Inc. maintains a market capitalization of $35 billion, broadly in line with the industry peer group. Netease Cloud Music Inc. trades at a lower price-to-earnings ratio of 12 times and a higher price-to-book ratio of 2.62 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The balance sheet appears very conservative, with liabilities representing only 25% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On the growth side, steady year-over-year expansion in active user base and increased subscription-based membership revenue have been key contributors to revenue growth. Amplifying offerings in signature music genres, collaborations with copyright partners, online and offline artist-centric activities, and expanding exposure for musicians have also played significant roles. In addition, revenue from online music services has seen a notable increase of 12%, while membership subscription sales have grown by 13.3%. These factors have collectively contributed to the overall growth in revenue. On the decline side, a decrease in revenue from social entertainment services and others has been a major driver of revenue decline, accounting for a significant 32% drop. Additionally, selling and marketing expenses, general and administrative expenses, and research and development expenses have all seen decreases, which have also contributed to the overall decline in revenue. Overall, the growth drivers highlight the importance of expanding offerings, collaborations, and exposure for musicians, while the decline drivers emphasize the need to address declining revenue from social entertainment services and optimize operational costs. The net income of the company experienced a significant increase of Rm 1,180.4 million between two periods. This growth can be attributed to various factors that contributed to the improvement in financial performance. One notable change is the rise in profit margins, particularly gross margin, which increased from 33.7% to 35.7%. This indicates that the company was able to maintain a higher percentage of revenue as profit during this period. The increase in gross margin suggests that the company's cost management and pricing strategies were effective in generating more profits. The company's financial health has undergone a notable shift. A significant increase in total debt level is evident, with the total debt rising from Rm 630,064 to Rm 387,165. This substantial growth indicates that the company has taken on more liabilities over time. However, there is limited information available regarding interest expenses. As such, it is unclear whether the increased debt burden has resulted in higher interest payments for the company. Management's primary focus is on enhancing the music experience for users while deepening their engagement. To achieve this, they aim to expand their distinctive content library by incorporating original Chinese music and popular genres. This expansion will not only cater to diverse tastes, but also provide a unique selling proposition in the market. In addition to content development, management is committed to improving profitability through cost optimization and operating efficiency enhancement. By streamlining operations, they hope to reduce costs without compromising on quality or user experience. Furthermore, they plan to strengthen partnerships with copyright holders by adopting a collaborative approach. This strategy will not only ensure compliance with regulations, but also foster a mutually beneficial relationship between the company and its content providers. Overall, management's outlook is centered around creating a robust music ecosystem that caters to diverse tastes while ensuring profitability through efficient operations. There are no notable acquisitions or divestitures to report. The company has not engaged in any significant transactions involving the purchase or sale of assets, businesses, or subsidiaries. This suggests a stable and focused approach to business operations, with no major changes to its portfolio or structure. As such, there is no impact on the company's overall strategy or financials resulting from acquisitions or divestitures. That concludes the financial summary for Netease Cloud Music Inc. Feel free to comment below, and I will be happy to answer them when possible.